4, 3, 2, 1.
Hello and good afternoon. Welcome to this webinar organized by Natixis Research CIB. I'm Bernard Dahdah, Metals and Mining Analyst within the research team, and joining me today is Marielle from the Infrastructure Project Finance, a specialist also in gigafactories, and also joining us today is Jérôme Agassant, an engineer, part of the Energy Transition Natural Resources team, who's a technical advisor, if I may say, on matters relating to batteries and gigafactories. Today we'll be talking about the Net Zero Industrial Act, which was released on the same day as the CRMA, which we discussed last week. So both of them were released on the 16th of March. And we will be comparing them, comparing the NZIA with the IRA. So what is the NZIA? So the NZIA is a legislative piece introduced by the European Commission. It still hasn't been voted. And the idea is that the NZIA with the CRMA complement the European Green Deal industrial plan. So in a way, the title of this presentation is somewhat misleading in that it's not specifically the NZIA that is the reply to the IRA. It's part of a reply. And also the complication is that basically the Europeans are always trying to play catch up, given that the legislations are so complicated, that it's together, as I mentioned, is part of the European Green Deal industrial plan. So what is the context of those legislative acts? Two very important things. So they come, after the start of the Russian war on Ukraine, and the realization by Europe that there is a need for energy security and energy independence, and that the way to accelerate and to achieve this energy independence is through renewable energies. The second point also is post-COVID, it's a realization about how with globalization, the supply chain, the global manufacturing supply chain has become very reliant on China. And the issue here is a realization also of resource nationalization in times of crisis. In that sense, it's not just about commodities, but it's also about medical equipment, and the face mask was one of the more prominent examples in times of crisis. So in that context, actually the IRA came out first, a way of achieving energy security for the US. The US are very quick, very responsive, given the nature of that country on a federal level. It's a very integrated, let's say, it's one nation as opposed to Europe. So the reaction was very quick. Now, the issue with the IRA was that it was somewhat perceived as having a lot of undertones of protectionist measures. And although those protectionist measures were aimed at defending vis-a-vis China and vis-a-vis Russia, Europe ended up somewhat of a collateral damage of the IRA. So the European response through the NZIA is basically trying to counter this. So what is the content of the NZIA? So the target of the NZIA is basically to reach at least 40% of the deployment of renewable strategic net zero technologies that respond to local demand. So basically they identify 8 strategic net zero technologies, which you can see in front of them. And the idea is that at least 40% of the European demand for those technologies will be produced on site in the European Union. And this legislative piece is suggesting a way of achieving it. So they're talking about the following actions, a 6-point action plan to be able to achieve this target of at least 40%. So when they're talking about setting enabling conditions, here it's essentially creating a one-stop shop whereby an investor in Europe or a corporation can just go to a one-stop shop, let's say in France or in Germany, and apply for its licenses from there. They can do everything online through one communicator. And that was one of the attractive things of the IRA, is that it was on a federal level. And the issue is that although Europe and the EU already had legislative pieces that were in place, like Repower EU, that was the reaction, if you want, vis-a-vis Russia. The problem was that it seems that from a permitting perspective, it was still complicated, and that the IRA was very attractive because it was a very easy, it proposes itself as really cutting red tape. So again, we had Repower EU, which was the reply to the point I'm making is that we had Repower EU, which was the response to the Russian invasion to Ukraine. It seemed that wasn't enough. Hence, we ended up having to create the GDIP and the NZIA and the CRMA after the IRA came out. I hope we're not too lost with all this. So that's the point, is that it creates a one-stop shop, basically competing with one of the very important aspects of attractive aspects of the IRA. The second point it makes by setting enabling conditions is that any strategic project, so this 8 I had mentioned before, so it imposes time limits to the permitting. So if it's a strategic project and it's producing less than a gigawatt in terms of manufacturing capacity, you get an answer within 9 months. If it's over a gigawatt, you get an answer within a year. Now, if it's not a strategic project, but it is a net zero related project, then if it's less than a gigawatt, you get your answer in 12 months, and it's over a gigawatt, you get your answer within 18 months. So it's this idea of reducing red tape. The second point also is accelerating CO2 capture. So the point here is reaching an annual capacity, injection capacity of 50 million tons by 2030. And they want to create that or achieve that by creating, establishing a single market for storage services and creating more transparency by bringing assets together. Also very important, the Act imposes that the bloc's oil and gas producers to proportionally contribute to the establishment of storage sites in the EU. The third point is facilitating access to markets. Here they're introducing a sustainability and resilience criteria in public procurement auctions. Fourth point is enhancing skills, creating net zero academies where they retrain or upskill, reskill some of the workforce, fostering innovation through creating sandboxes with reduced regulation, and finally also a Net Zero Europe platform, which is kind of like an information system where best practices can be exchanged. Now, what are those specific ambitions that the NZIA wants to try and achieve? So the NZIA has a few policy scenarios. Okay, the table in front of you is for the base case policy scenario. Now, the first one is a status quo scenario whereby the share of production of the EU of those, let's say, wind, heat pump, etc., remains the same. They reckon that 52 billion euros worth of investment is needed. Now, if the EU wants to achieve this specific target, which is on your screen, of having 100% of electrolyzer capacity produced in the EU, 90% for battery cells, etc., 45% and 85% for wind, then we need roughly 92 billion euros when you include CCUS worth of investments. Finally, they have another scenario whereby everything is 100%, then they estimate the need at being 119 billion euros. Now, we're going to focus in this conversation more on the battery side of things, The reason being is, as you can see from the figure, the manufacturing capacity investment needs for battery is something like 75% of the total, or 68 billion euros that will be needed. How are they going to finance this? So the way they're going to finance this is they're saying that the relationship is going to be 17 in their calculation, 17 to 20% worth of public money, of grants, and the rest will come from the private sectors. So that would be equivalent to something like 16 to 18 billion euros. Now, where does specifically that money come from? So the NZIA, it's important to note, doesn't provide additional money. It's piggybacking on what already exists and what hasn't been already spent. The only thing it does is it just puts targets. It's kind of reducing red tape. So you can see from this chart a mishmash of programs that are able to finance this. This is the NZIA in a nutshell. Now, to the point of how it compares with the IRA, specifically from a battery perspective. Sorry, before we discuss the battery perspective, how does it compare with the IRA? So the IRA is much more concrete and much more straightforward from the first appearance. It gives specific targets or specific sums of money. And also the IRA is a tax, we're talking about tax rebates here. And so if you look at the battery side of things from the IRA perspective, they're going to be offering at the production, so at the output perspective, something like $45 per kilowatt hour in terms of tax credit. They're going to be offering something like, that translates, into something like a 30% decrease in the cost of producing a battery. And this is why we're seeing a lot of interest from gigafactories in Europe to potentially, including VW, to looking at establishing themselves in the US. Now, the way the NZIA works is that it's going to be through subsidies. And so the subsidies and the grants will take place before even the project starts. It's at the seeding side of things. So this has advantages and disadvantages, and we'll discuss in a minute. But the important thing is to note here, it requires board negotiation from the corporates, whereas from the IRA's perspective is, okay, you produce that much, you get that much. Whereas the problem, I guess, or the issue one could argue with the European NZIA is that no two companies will get the same amounts of money for the same amount of production of the project. It's going to be all about negotiating. So on that point of batteries, I'm going to move on to ask a question. First of all, I'll start with Simon. Based on what I said in terms of NZIA versus IRA for batteries for gigafactories, you, from your experience as a banker, which one looks more interesting and why?
So first comment, I think the difficulty in comparing these two pieces of regulation is that they are not totally complete, especially on the European side. As you explained, the NZIA came after several initiatives, and we already know that others are coming. So I guess the full comparison can be made only, I guess, in a few months or years once we will have looked at to what extent the EU will effectively mobilize more funds, flexibilize more the state aid regulation. And so there is more to come. We have to be very cautious here. Clearly, from an investor perspective, providing, you mentioned around the order of magnitude 30% cost decrease for the manufacturing of gigafactory in the US is enormous. It amounts to more or less doubling of the operating profit or even more. So there is a huge stimulus in the US to basically invest very quickly, because these tax credits have a deadline. They will start to disappear from 2031, 32. I don't think it will change the projects that have been already launched. It's too late, but for the future projects that are still to be decided, effectively, we may see some investment coming in the US, because the IRA, the Inflation Reduction Act, is brutally simple. You have very clear guidelines, and you see the impact on the P&L at a time when you invest in a project like this, where the ramp up is kind of difficult and slow, and that's where you have the most risk, because on this gigafactory you need to basically reach a scrap rate which is optimal, and that's when you are starting a new business or starting a new gigafactory, that's where you have potentially profitability problems. So this tax rate in the US is very effective. That being said, I think on the European side, we will see aids becoming more flexible. That's what we hear and what we can expect, both at the start, when you need to launch a research and R&D pilot plant, for example, and you have a lot of tools that already exist, and that will be, I think, accelerated to finance and support. What I think is important to keep in mind is the fact that these regulations are evolving, and that there is competition now between between Europe and the US to attract investments. And so, from an investor's perspective, you have to be mindful of what the fundamentals are, what kind of technology risk you are taking, which project are you backing, which OEM you are in the end backing on. Because this tax benefit or aid will disappear at some point, but there is clearly a push toward more support from the various regulations.
Thank you. And Jérôme, from your side, I mean, from what you're seeing or talking to clients, I mean, what do you, what's, let's say first in theory, what's your impression of this?
I think one of the benefits of the NZIA is that because it's grants and because it will be at the end decided with this one-stop shop, they will have the choice to decide who to help first. So they will have the possibility to favor European industries rather than Asian companies going to settle down in Europe that have already some cash flow. So they can do that choice. They can select the project that they think is most interesting, both from an economic perspective, but also from an employment or from an ESG perspective, which is not at least on the battery side. There's nothing like this in the IRA. You're going in the US to receive $35 per kilowatt hour on the battery, plus $10 on the pack, regardless of your CO2 footprint. So in Europe, there is the choice to favor one versus the other, which can have some benefits. And so you can, especially in an industry where until a few years ago there was no European player, you can make them live, and then hopefully later on they can live by themselves, and so it can be quite still a positive point.
To your point, actually, you're right in terms of I didn't elaborate too much on it, but the facilitating access to markets by introducing sustainability and resilience criteria in public procurement and auctions is related. Basically, it's not a protectionist measures as vis-a-vis, I don't like that country, I only want to buy from those countries. It's about what is the CO2 impact of this, and this is what we want to encourage is lower carbon footprint, which goes to your point about differentiating between the IRA. And so if I understand in a nutshell, from your point, is that if you're a startup or a company that doesn't have much funds, you're probably better off being in the EU and benefiting from grants at the start. But actually, the IRA probably favors those companies that are really well established because they're getting tax credits from the end. Is this a fair thing to say?
I think this is what we see. I mean, the Tesla and the BYD CATL will benefit from the IRA, but possibly the new European players will build their second or third gigafactory in the US before they build their second or third in Europe. So once they're established and they know what to do and they don't need to develop their pilot anymore, they will be able to go to the US and benefit. I think there's also a difference in terms of who takes the risk. When you fund grant initially, if the company doesn't deliver exactly on their capacity, well, this grant has gone.
Yeah.
On the US side, if you deliver half of the capacity you promised, then you get only half of your tax credit. So in terms of who share the risk, it's a bit different on both sides of the Atlantic as well.
Interesting point. And on the comment that Simo was making about, it's automatically 30% cheaper, this point we were discussing about it. Can you tell us more perhaps on the cost of production at a gigafactory level? Because one of the points I noticed when I was looking at this legislative piece is they based their figures of how much it costs from third-party data providers, and they assumed, you can see from that table, BMI and BNEF is from where they actually took that source, and this is how they assumed. They said in their piece that China $68 million it costs per gigawatt, the US $94 million, and Europe $100 million, and actually they say 144 or 150 once you include the anode and the cathode production. And that's how it goes in their calculation of 68 billion, which I mentioned in the previous table. So how much does it cost? Do you think the assumption they put in place when calculating is what you guys are seeing, both of you? I mean, is it?
I think it's a bit on the high side. The difficulty is to know if this is pure capex or if you include all the financial costs behind, if you include the pilot and the lab that needs to be built. But we tend to see somewhat smaller numbers. What we do realize is that there is a large variation on the deals that we see on the European side, but also on the WoodMac database that we get access to, where we see more than 80 different projects. We see a large variability, and the way we can explain it is that half of the capex is on the building and on the civil work. So if you can build your plant on an existing automotive plant and the civil work is done, then it's much cheaper. There's also a scale effect. If you build a 60 gigawatt hour plant, or if you build a 10 gigawatt hour plant, the unit cost will be different as well. But typically, a big player that needs to clean a forest in the northern of Sweden will have more cost in terms of civil work than someone that is going into Dunkirk in an industrial area that is already there. Okay. You also see difference on the perimeter. Some companies, they will just focus on the manufacturing of the battery cells. Others will go more upstream into the precursor, into the active material on the cathode and or on the anode side. Some on the downstream will go into the pack and module that goes where you assemble your battery before you put them in a car, and some also will include some recycling facilities. So this is where it's a bit difficult to compare apples with apples, and this is why we see a large range. On an average, in the project that we have had the chance to see so far, we see something rather in the magnitude of $80 million per gigawatt hour. So not as high as 144 that was quoted by the NZIA.
And I can see from your chart that you provided us with this very widespread. What is the secret of Chinese low costs? Is it labor costs? Is it electricity costs? Is it access to raw materials? Is it all of it? What makes them substantially cheaper than, let's say, is it the learning curve? I don't know. Is it what do you think is the?
Well, this chart is about the capex. Okay, so how much it is to build a new factory of this size. The labor comes a little bit into it, but I think then it comes to your supplier, and you're able to lower the cost of the equipment, which is roughly 50% of the capex. Okay, when then you now want to know what is the profitability, you look at the OPEX side. Okay, And on the OPEX side, for everyone to be clear, 80% of the cost of the battery is material. Okay, so we have the raw material, the nickel, the cobalt, the lithium, and then we've got some material that is not fully raw, so the electrolytes, the separator, which is a polymer film that you put in between the two electrodes, and all this material is 80%, and there is no reason why it would be so much cheaper in an area of the world. Maybe what can explain the difference is some companies will have stricter ESG criteria and they will go to mine or refineries that are a bit more expensive, but that have a lower footprint in terms of CO2. But all gigafactories will be exposed to this 80% of material costs. On top of it, you've got salary, which is around 8 to 10%. So there you can see a difference, but I'm not sure anymore that China is the cheapest country in terms of labor costs. And then you've got power. And the power, even though a gigafactory consumes a lot, because all of the rest is pretty expensive, the percentage of power in the OPEX is between 1 or 2% if you got a really low PPA to 5 or 6%. So this is not a big difference. Exactly. And so the consequence of that is that when we get to see market report, we see that the cost curve are pretty flat. Okay, and we see that the European projects are well positioned in this cost curve. And interestingly enough, it's more the Asian player on the Korean and Japan side that were the early mover that are on the first quartile, because they possibly operate factories that are already 10 years old that are a bit less efficient of smaller size versus the projects that are being built now in Europe and that are going to deliver in 5 years' time. But we don't see a very big difference in terms of competitiveness between a factory in China and in Europe.
And if I can comment on that, Jérôme, I mean, I guess it's on theory because all the cost curves we have are kind of projections, and clearly today we see some differential in terms of cost of battery between Europe and China, for example, but it's not totally comparable because the chemistry and they are not necessarily the same. So it's difficult to compare, but the big question is effectively whether the gigafactory in the US and Europe will be competitive compared to China. And everyone has in mind what happened on the photovoltaic sector, where at the end of the day, China was really the dominant producer. The question for Europe and the US is whether for this nascent industry, where economies of scale are key, we will be able to reach enough economies of scale to be competitive, knowing that the learning curve and ramp-up period is quite long. And it won't be a linear process. You will have potentially cost overrun and investment and change in technology, small, but you will have. So one of the big questions I think for us that it remains open on all this regulation is whether at some point there will be a carbon tax being imposed, as if we, and that was a concern that was raised by some of the OEM representatives, notably in Europe, if we build EVs or battery with a lower CO2 content, so greener, so to speak, in Europe and in the US, but then we compete with a Chinese battery with a higher CO2 content, but much cheaper, and there is no mechanism to protect the European market, for example, it could be a big issue. What we are looking at currently, I mean, that's the current news, is the price war that Tesla is starting, and with comment from the Musk saying, we prefer to decrease our margin, gain market share, so again, volume, economies of scale, because we believe that in the future we'll make money on autonomous car. And clearly there will be this race to reach the size where profitability will automatically be triggered and be generated. And the question of competitiveness of the European and US industry is the key, and that's why all this regulation and tax are quite important, but investors should not lose sight of the fundamentals, technology and who you are banking, and also the pace of market adoption. Maybe a comment on this. If you look at the figures, it's quite astonishing. At the fourth quarter of 2022, if you integrate plug-in hybrid to the battery vehicle, the overall EV market has already reached 30% market share in Europe and the US. In Europe and China. In the US, it's a bit less than 10%. So what's happening in the US? That they are catching up. They are trying to track investment to move the market. But unlike in, I would say, China and Europe, they are not playing as much on the demand side. They are fostering supply. Whereas in Europe, there is a choice, which has been a bit discussed recently, to forbid internal combustion engine cars. So it's kind of forcing the transition on the demand side, which I guess would be kind of painful at some point. But so US is really trying to catch up, which is great. And as again, for investors, competitivity is really the key that should be looked at.
That was one of the questions we got. Please feel free to submit your questions on the chat. One of the questions here is from an investor's perspective, what are the real questions to ask when you're dealing with a gigafactory? I mean, is it the technology risk? I guess that person asking, is it speed of adoption? How does each one of you take it?
Well, if I can start with the technology risk, I think the question is how easy it is for an existing battery manufacturing plant to keep up with the technology that is always changing. The issue is that you build a gigafactory now based on the technology which is the state of the art. What is the risk that tomorrow another technology evolves and makes you irrelevant? And I think we can. The understanding that we have looking at the past and looking at what is expected in the near future is that even though we're talking about a lot of chemistry that are different on the cathodes, a little bit less on the anodes, that doesn't really impact the manufacturing of a battery cell as a whole. The manufacturing steps are the same if you're doing an NMC 111, if you do a high nickel battery, or if you do a FP. At the end, it's just mixing a powder of metal oxide on the cathodes, trying to coat that at a really thin thickness, do that at speed. It doesn't change if you've got nickel, cobalt, or if you've got phosphate and iron. So those gigafactories as such, they are able to adapt to this change of technology and to this change of chemistry. They control it as well, because in terms of the relationship with the OEM on the offtake side, it takes many years to get qualified with the new product. So you can do in parallel improvement work on your laboratory and on your pilot plants, and that gives you time to upgrade your machine. But we're not talking about having an investment that is irrelevant after a few years. It's more an investment that will need, as everything else in the industry, a bit of upgrade capex to keep up with things that you control and you decide on which way you go in this technology.
So as long as we're dealing with lithium-ion batteries, the chemical mix, the cocktail changing doesn't really make a gigafactory redundant. But if you're going to come and tell me, oh, we want to build a sodium solid-state battery, then that's a completely different story. I mean,
it's not even completely different. It's just that you change ion, but we know that the physics and the chemistry means that a sodium ion is the weight is much bigger, so it will not compete for the mobility sector. Okay.
Okay.
For the BSS, possibly yes, but this is not the bulk of the volume. 80% of the volume of the batteries is for the EV markets, for the mobility one, and 10% for electronics. So you're not that much exposed to these changing technologies. Yeah, I think the biggest impact is possibly on the companies that have invested a lot of effort on the supply. Okay, so if you focus many years of discussion with the cobalt and nickel supplier, and tomorrow you change your chemistry, this tomorrow becomes irrelevant. Okay, but a lot of the battery manufacturing are just focusing on the manufacturing itself, and they're buying this what we call the CAM, the cathode, the active material, to other companies like Umicore. And so the problem of this chemistry is their problem. It's not really the problem of the Vercor or the ACC or those guys.
Okay. And you, I mean, how do you see it from an investor's perspective? What are the substantial questions that one needs to ask? I mean, I understand from Jérôme that if they invest for the next 10, 12 years, it's not going to become redundant anytime soon, even if they decide to change the chemical or nickel content. I mean, what do you see it from an infrastructure finance kind of banker type of perspective?
I mean, we look first at the seriousness of the project in terms of investment in the technology, pilot plant, and to what extent the process has been tested. What we understand is that, I mean, the key, of course, is the strength of the offtake contract with OEM, and we are quite pleased because on this new segment, OEM have made a fundamental shift to their policy, and they've been committed long-term on contract, which is kind of a very big change for OEM, which are more used to squeezing their suppliers. And this kind of long-term offtake is really the key to allow project financing, and I think it also provides visibility of return for equity investors. So we have really the groundwork for a kind of new segment to attract capital both on the equity and on the funding side. I mean, beyond the technology, I think people need to understand that a gigafactory is always kind of a technology partnership between the gigafactory and the OEM. For an OEM to pick a gigafactory, you need to have a very long audit of the processes and of the technology. So it's not today a commoditized product in the sense that the OEM will effectively choose a technology and will integrate the battery, the cell in a model and in a car. And we are looking also at the alignment of interest between the off-takers and the gigafactory, as some of them, at least in Europe, have some of the main off-takers in their capital, which provide an alignment of interest in terms of contract renewal. I think I mean we've seen some of the projects have had some difficulties in Europe, and that's really I mean one of the reasons is that they were, I think, lacking the support of OEM, and one can guess about why some OEM didn't back some of the important gigafactory like in the UK. Maybe they were not convinced about the progress made by the project. So we are looking at really the main credit profile of the investors and the technology risk and the strength of the offtake contract. That will be the main point. I think one thing which is not discussed at length now, but it's really the oversupply. It's addressed in both regulation in the US and Europe, but where we see the biggest bottleneck is clearly the midstream and the mine supply. And I think the very interesting shift both in the US and Europe is the state support to the new mining operations. And this is very counterintuitive because for us who have been financing mine operations for quite some time, the not in my backyard attitude in Europe and the US is very strong. And in the US, we see a lot of permitting process dragging on for quite some time. And very recently, we saw major OEM investing in mines, US state entities providing gigantic loans. So effectively, there is this change of attitude, which is very interesting. What we need to understand in Europe and the US is that we are lagging behind the Chinese. We've been investing in Africa and securing supply for quite some time, And even now, we're able to invest in some lithium mine in Zimbabwe or in Mali. And that's the biggest challenge. I mean, we know that we won't be able to rely only on lithium coming from Europe or the US. We will need to invest not only in OECD countries, but in emerging market countries. And so this whole supply chain will depend on, of course, how green our processes are in Europe to build the cells, but to what extent we can secure virtuous mining operations in emerging market countries.
Yeah, that's I guess the point of the CRMA is to try and encourage getting those metals and investing, even not just in Europe, but investing in sustainable projects abroad in friendly nations. And yes, we're definitely playing catch up. We've got a couple of questions here. So Jérôme just discussed about competition among battery gigafactories, but what about more about hydrogen battery technology? I guess you were talking about fuel cells. I mean, from my perspective, I'll let you answer, but from my perspective, having looked at it, if we're looking at electric vehicles, I guess one of the major issues is the energy needs or energy consumption that is needed to achieve the same amount of kilometers from a hydrogen fuel cell car versus a lithium-ion car. So the most striking example I have in mind is if you're starting with a wind turbine trying to create electricity, green electricity, you'll probably end up, you're creating electricity, goes into the battery, transmission you lose 5%, goes into the battery, the battery converts into the motor and moves the car. You will be able to use around 85% to 80% of that electricity that was initially produced. If you're using hydrogen, or if you want to create hydrogen, that same wind farm is turning, wind turbine is turning. You have to transmit the electricity. Okay, it's going to be next to the wind turbine, but the problem is the electrolysis, the compression, then the transformation again back into electricity. You're losing a massive amount of energy, and you only end up with 35% of what you started off with. So that is the big battle, in my perspective, from someone who just looks at things from an economics perspective of efficiencies. I mean, the way I look at hydrogen is very interesting for green steel. I don't think in terms of cars, automobiles, that we're quite there in terms of electricity, especially in Europe where electricity is relatively scarce. I don't know, Jérôme, if you've got some input or insight or some opinion about that question.
Yeah, on the technical side, I'm working on both sides. Yeah, and I'm always struck with this very big difference in terms of efficiency. And I had in mind rather 90% on the battery side versus as low as 30% on the hydrogen side. So you will need 3 times as much windmills and solar panel to drive the same amount of kilometer. And the limit on the hydrogen cycle is more on the fuel cell itself. So it's on how much you generate back electricity in the car rather than on the generation of hydrogen initially through electrolysis. And this fuel cell is also something that requires precious metals. So the issue you have with cobalt and nickel and lithium on the batteries, then you've got that with platinum and palladium on those fuel cells. So you're not safe on this.
On Russia,
exactly. Having said that, the hydrogen gives you the ability to drive longer distance to charge faster. So there would be some segment on the roads that would benefit from that. Heavy trucks, long distance. Okay, so those are where the hydrogen has still some room to maneuver, and it can also be used on trains, on ships. But we've seen that as well, that you've got trains that are on battery, you've got ferries in Norway that are 100% on batteries. So the battery is moving fast, and they are now able to offer products that are big power, like the LFP technology is one that is lower driving range but more power. So for some heavy trucks, it can be interesting where the size to put your battery is less problematic than in an individual car. So the battle is still living, but not from the individual car, rather on the heavy segment on the road.
Thank you. Second question we have here: what could be the impact of carbon tax for imported metals? Funny enough, the EU finally voted today on the Fit for 55. 5 parts of that legislation. One of it was about the CBAM, so the Carbon Border Adjustment Mechanism, which is basically a tax for, as it currently stands, if you're producing aluminium or steel or what so in Europe, you're being given free tax allowances to offset your emissions. And that's going to be a bit unfair because if you're importing something very dirty from abroad, well, also you're not paying anything. So the idea of CBAM is you will have for, let's say, aluminium to announce, to declare the carbon footprint of the aluminium that you produced. The example I have in mind, if your coal-powered dirty aluminium smelter, we're talking about, I think, 21 tons of CO2 per ton of aluminium produced. With the current ETS price of, let's say, 100, that's $2,100 euros. And the price of aluminium is pretty much that. At the lower end, you have 2 tons of CO2 of, say, primary aluminium coming from hydropower or from nuclear. So I think the repercussion of CBAM is going to be drawing in the lowest carbon footprint and kind of attracting a premium to be able to, putting a premium to be able to attract that metal. And the premium is actually a penalty. Sorry, it's not more of a premium. Actually, it's by penalizing the other metals, let's say from China, where they produce on coal, you'll be attracting first and foremost as much scrap as you can. I think for metals in general, any scrap business related is a winner, given that, let's say, for example, I think aluminium produced from scrap has 98% less emission. I think copper, something in the 90s. So it's going to be a pyramid of an order of merit of attracting what is the lowest. You attract scrap, then you attract anything related to hydro, then you attract anything related also to nuclear, and then you go up and up and up. Eventually you reach to the coal. But for Europe, from the calculations that I have done on aluminium, it was more than enough. Hydropower aluminium production in the world was enough to feed in European demand.
And maybe on this, I mean, that's an important point, because the main metals for the lithium-ion battery that will have an impact are nickel, cobalt, and lithium. And currently, it's not included in this carbon tax mechanism. The question is, will that be integrated at some point? And this will clearly have an impact. Today, we don't see yet in the metal sectors differential pricing for mines which have a lower CO2 content. But the logic will be that if this type of piece of regulation will go down to the raw materials essential for the battery, we may see a premium or discount depending on the carbon intensity. And that's how normally you should have a very market discipline approach to the whole value chain. And this will partially answer the competitivity question that Europe and the US will face compared to other big regions that may not have the same piece of legislation. Keeping in mind that if this is put in place, and China, for example, has the same or a similar carbon tax system, they won't be taxed, but they will also have to, basically, that's a stimulation for all other economic area to follow the same trend. But limiting ourselves to the current segment of steel, aluminium, I think fertilizers, and a couple of others is too limited. So we know that's the first step that the EU is testing, but the big challenge will be to integrate much more commodities essential for this carbon transition.
Thank you. as a final point, it was something, a point that I'm conscious about time, that I forgot to mention, but as a question that's often asked is what are we seeing from, are we already seeing European projects when it comes to gigafactories that are going to the US because of the IRA? There was talk about VW assessing the situation. And then there was an article in the FT which mentioned that around something like 12% of what has so far been allocated by the IRA has gone to what would have been European investments. So those are European investments in the US, which could have stayed in Europe. So the point was to say with the article that 12% isn't much, that Europe is overreacting when it comes to the IRA. And I kind of disagree with that point, because I think this is the tip of the iceberg. We're still waiting. The legislation at NZIA just came out. And as Simon mentioned, it's not going to be the end of it. I think in May or in June, there's another top up to the NZIA, which means that the corporations, the companies in Europe still have some time to wait to see what is the complete European package proposal before they decide to go, if they want to go to the US or not. Thanks a lot for your time. Thank you, Simon and Jérôme, for your time. If you have any other questions, please don't hesitate to email us or to go back through the communications email that you received. Thank you very much and have a good afternoon.